There's a short seller on Twitter who's making all these claims that NVIDIA is a Ponzi scheme and that there's all these red flags in its financials. I'm going to get right into it. We're going to talk about this. I'm going to share my screen and we're going to get going. All right. So first he calls NVIDIA a Ponzi scheme. Ponzi scheme is where it takes in money and the people high up in the scheme take money out and it's dependent on new money coming in. If NVIDIA wasn't so profitable, yeah, definitely not a Ponzi. So the first issue he says is, I know a couple things here and there about running a company, but later on you'll see that they don't really seem to understand how NVIDIA works as a fabless semiconductor company. He says, red flag number one, NVIDIA salespeople are doing such a spectacular job. Why aren't their commissions rising in line with revenues? So NVIDIA's profits are exploding. You're not just going to give a certain percentage of your profits to your salespeople. Salespeople at NVIDIA are very highly compensated, especially at the enterprise level. Some can make $1 million or more a year. But there's no reason to be like paying someone 10 million or 100 million or $1 billion a year just because your revenues go up a certain amount and your profits spike. So NVIDIA, their overhead only increased, I think about 15%, maybe 12% year over year, even though their revenues tripled. And that's what you call leverage in a business. That's what you want to have in a business. All right. So let's go to the next one. Why did the accounts receivable explode by a whopping 1,600% to 4.5 billion in the same time frame? So in business, you have what's called payment terms, and most payment terms are 30 to 60 days, maybe. So it's about 1 to 2 months, possibly. NVIDIA's customers are the hyperscalers like Meta, Google, Amazon, Microsoft, obviously with OpenAI, Tesla, X, etc. These are very large companies, and when they order $1 billion of equipment from NVIDIA, they don't just pay them immediately in one check. There's a delay. So let's put the 4.5 billion in context. So you have 4.5 billion, and this quarter they just had 18 billion in revenues. So if you divide this by the number of days, let's just pretend that there were 92 days in this quarter. Essentially, the accounts receivable, so this 4.5 billion that they're waiting for, basically represents 23 days of sales. But again, payment terms for NVIDIA getting paid by their customers may be 30 to 60 days in some respects. So this 23 days of sales is actually pretty low. So this is not a red flag. This is a misunderstanding of how business is done, as I've explained, with payment terms and how many days of sales they're waiting to get paid for. Then he says clients are not paying for. So we're gonna go over and see if NVIDIA is getting paid. So we're gonna look at their cash, look at their income statement. So let's see, we've got statements of income, then we got the balance sheet, and then we got cash flow. So if they're not getting paid, they would not be receiving cash. And let me share my screen again so you can see that. So the net income was 9 billion. And this is the consolidated statements of cash. So the net cash from operating activities was 7.3 billion. So essentially, their cash grew from operating activities by that amount. Then their cash lowered because they bought some bonds or some cash instruments with their investing stuff. And then they did a buyback of their stock. They bought back 3.8 billion. So NVIDIA has a ton of cash, and this is the year over year, or no, the 9 months gain in cash from operating. So their customers are paying them. When customers pay you, that shows up in the operating cash flow. And let's just look at the balance sheet. So net cash has grown by 5 billion. So there's been some buyback of stock, as you saw. So when you see all that operating cash, a chunk of it's going out the door because NVIDIA cannot spend cash fast enough. They have a very capital light business, and we're going to go back to that. Let's see. Go back to this. Dang it. All right, let me find this original post again. Bear with me one quick second. Got it. Got it. Okay. So NVIDIA is getting paid by their customers. Their customers are paying them a very handsome penny. If NVIDIA is doing so well, why did their inventory remain the same? When you sell so many goods and keep booking stellar future orders, there should be a physiological increase in inventory. So no, that's not how that works. Essentially, it can work that way if you're struggling to get inventory out the door. So they're saying that the inventory stood at about the same place. So what happens with inventory is, and some of this might be goods that NVIDIA is keeping for themselves. They do rent out servers, and they do it strategically where their servers are in such high demand, they rent them out at a premium. And this would be property, plant, and equipment, not technically inventory. But 4.5 billion, and let's say it is NVIDIA's inventory, that's 23 days of inventory. NVIDIA also spoke to inventory as far as having it ready for customers. These customers, Meta, Google, Amazon, Facebook, Microsoft, Tesla, they order in batches. So Tesla, they just received 10,000 supercomputers, H100s, and they are putting them to work now. Hopefully they have them all working together now. But they don't like sit there and order 2,500 each quarter. It's done in one big project, or that's what it can be done. So like, what he also asked, why didn't we see a 7% increase in sales generative administrative costs? He's tying this to inventory. That's not how it works. Your inventory isn't linked to your overhead. Then he talks about royalties to third parties for every chip you sell, because there's a bunch of IP, and this did not increase. This, I'll give him this point. I'll concede this point. Why didn't this increase in a major way? Because their revenues have greatly gone up. Maybe royalties here are not revenue based. Maybe they're unit. Let's see. Yeah, maybe they're unit based, and maybe the units are kind of about the same. That's possible. It's possible some royalties have come down or they've been negotiated down by NVIDIA. So I'd be curious to learn more about that. Um, and then they say that they're doing a trick to mess with people. So Apple apparently lost money on their investments, while NVIDIA has not lost money on investments. So what I'm guessing has happened with Apple is um, Apple may have invested their money in longer dated bonds. And as interest rates go up, the value of longer dated bonds goes down. I'm guessing they lost money that way as far as the value of the bonds. If Apple holds those bonds to maturity, they're not going to, you know, they won't actually realize those losses. NVIDIA likely invests in bonds that are shorter dated, so a year or less. So when rates go up, typically they're going to make so much money off of their interest that any kind of temporary decline in the value of like a 1-year bond um, would be covered up by the interest they're getting. So this to me tells me that NVIDIA is taking less risk with their investments in bonds. Um, then he's like trying to discourage the people who are long. Um, and then he's like, then we're tagging in other short sellers, things like that. And then there's other conspiracy theories. For some reasons, this short seller he tags Jim Chanos, who just shuttered his fund. I wouldn't be wanting advice from Jim Chanos right now. Um, and thanks to Bo here, someone I follow, and Neil for making me aware of this post. Um, there was one more claim made about NVIDIA. And I'm just not seeing it. Okay, here we go. So NVIDIA is what's called a fabless semiconductor company. So that means they don't have a fab or a factory to fabricate the chips. They are using primarily Taiwan Semiconductor to make the chips. And what they do is Taiwan Semi doesn't want to just put all this equipment in and devote the workers and then have a case later on where NVIDIA just decides to abandon that equipment or abandon that chipset. And then Taiwan Semi, they're out financially. So the way it works is NVIDIA has to prepay Taiwan Semi. So this, even though NVIDIA's CapEx is very low, this is kind of like a way where NVIDIA puts down money for having that supply, having that capacity, and having the guarantee capacity. So Taiwan Semi can't choose to favor another customer over NVIDIA once NVIDIA has made this capacity agreement. So this you would expect to go down. And the terms of the agreement, we don't know. It's possible it doesn't go to zero over the life, but there's some kind of charge to NVIDIA when the agreement's over. So this prepay amount may not go to zero. This is a risk for NVIDIA. They got their equipment. They got Osborne last year, so they had the the 3000 series of their graphics cards, and they have the A100s on the AI side. And what happened was the 4000 series specs leaked, and then consumers stopped buying 3000 because they were wondering, okay, how much is 4000 series better, and how much is it going to cost? And until they got clarity, people just stopped buying from NVIDIA. And even when they had clarity, they wanted to wait till NVIDIA came out with the pricing and the supply before people really bought. And some of the enterprise customers pulled back too, because each generation of graphic chip is tied to the servers, the data servers, the data centers. So you had a big drop in business that NVIDIA did last year, and to be done, or to pay, they basically had to pay Taiwan Semi like a penalty for reducing the supply of the old generation. So this prepaid supply and capacity agreements is something where eventually that dollar amount will be a cost. But let's put this in perspective as well, where NVIDIA had to pay $3 billion for this this supply capacity, and this last quarter they just made $9 billion in one quarter. $9 billion. So like they made 300% of this of these commitments. They made 300% in one quarter. You you can't annualize it like this, but like they basically made like 1200% on this amount, or that's what they're going to be doing going forward for a while. So you know, this is something that has a little importance financially, but it's basically NVIDIA's quasi CapEx. So they are capital light. They just made 9 billion off of 3 billion. And that 3 billion is already put down. So like NVIDIA didn't put down another 3 billion this quarter or anything like that. So I think these concerns are overblown. Yeah, I am interested in that one issue that I gave him a cookie on. I'm guessing this Dario person is short NVIDIA. There's a lot of people who have replied or quote tweeted who are just like simply believing this guy. And that's why I wanted to come out with this video. I think a lot of these points are just wrong. Yeah, so that's why I'm sharing it with you today. I want to wish you a happy Thanksgiving. I guess where I would agree with the shorts is, or not agree, but you know, say, well, you know, maybe it's plausible, is we don't know how long this growth is going to last after 2-3 years. We don't know if NVIDIA will still be on top. AMD's coming on, Tesla's coming on, other people are coming on with making these chips. But like Microsoft is making a custom chip and they're having to work with NVIDIA. This was just in the latest conference that Satya Nadella led. So some people are saying NVIDIA is overvalued, but when I look at what they're going to do conservatively next year, $16 in earnings is kind of where we are, is like a bear case maybe. Essentially NVIDIA is at 30 forward price to earnings, so a 30 forward PE. But I actually think that they're going to continue to grow on what they are projecting for this next quarter. And they have been projecting low on the low side. So it's possible NVIDIA could do 100 billion next year in revenues, and be able to make 60 billion in profit off of that. And essentially it's at a, and that would be 25 per share in net earnings, so net of taxes. So then it would be at a 20 forward PE. So if you're a value person, you need to be looking forward on what they're going to be doing next year. A growth company is rapidly growing their business. You need to look forward, not backwards. So people that are making these valuation arguments and not looking at just some basic napkin math for okay, what if you just annualize this current quarter? What does that mean? So I think people who are shorting the stock are living a little dangerously. Yes, there was a run up prior to earnings, and it's cooled off after that run up. But that's not any meaning on how good the earnings were. It's just a lack of demand for the stock. People gambling on this event, they buy it up prior to the event, and their intention is to sell after the event, and then they're competing with other people to sell right after the event. So playing these news events can be a bit dangerous. I think that's mainly what I wanted to cover today. Yeah, I think this person making the post is not a tech investor, isn't really understanding the chip industry, and they showed that with how they were talking about the prepaid capacity and supply agreement. I think if you don't know an industry that well, you maybe shouldn't be posting on it. Maybe you shouldn't be shorting it if you don't understand it. Anyhow, take care, and again, happy Thanksgiving. Bye for now.